As previously introduced, Karel, sole shareholder of Innovative Electrical Services, decided to set out on the journey of transforming his business from an owner-operator replicator-type business into an asset of value. The first step in this process is to assess the current state of the business against the 6 criteria discussed in this chapter. Let's first look at dependency, operations, and specifically installations. Karel has been able to reduce the business's dependency on his direct involvement insofar as it relates to operations. Over the last few years, Karel recruited and trained 2 teams, each made up of a junior electrician together with 4 technicians. But due to the inexperience of the 2 electricians, Karel still has to design and sign off each renewable energy installation. Karel also feels compelled to spend a substantial portion of his days visiting and overseeing installations to ensure quality and safety standards are adhered to. Next, we consider procurement. Karel maintains control over procurement of electrical components and consumables. Karel is the only person in the business with the technical skills and the product knowledge to procure suitable components. To control costs, Karel spends a lot of time negotiating prices and trade terms with suppliers. Fearful of losing money due to negligence or theft, Karel maintains a tight grip on inventory management. To ensure that IES can deliver on its obligations to customers, Karel always maintains control over what components and consumables are in stock. Then we consider human resources. Karel has a small team of hand-picked employees. IES has no explicit staffing policy since Karel has always relied on his gut feel when recruiting people. Karel has only a vague understanding of industrial relations, regulations, and legislation. Then there is administration. Karel's first appointment was an office manager to assist him with administrative tasks. This appointment has proven to be very valuable in freeing up time for Karel to work on more important tasks. Sales. Karel relies on word-of-mouth referrals for most of his business and personally engages with every prospective customer. Karel spent very little resources on marketing efforts. EIS has no sales team or explicit sales process. In addition, most sales revenues are from the sale and installation of solar equipment. Very little revenue comes from other sources. Lastly, we consider financial management. Karel takes responsibility for all financial decisions in the business and relies on a long-standing relationship with his current bookkeeper. Then we consider transferability. IES depends on Karel to legally operate. Ownership of the business in its present form can only be transferred to another electrician or electrical engineer. Next, we consider indebtedness. The business presently has little in the way of short-term debt, but the bank insisted that Karel sign a personal surety to secure the overdraft facility. In terms of long-term debt, this debt consists in the main of vehicle finance and a shareholder loan. Customer base. IES do not have a current customer base, since all transactions are once-off installations, which is not to say that Karel receives no repeat business. Systems. Karel has some rudimentary processes in place to assess a customer's need for renewable energy solutions, together with loosely defined processes for installations. But most tasks are done on intuition and as the need arises. Financial reporting. Karel relies entirely on his bookkeeper to produce the financial reports and administer his affairs with the tax authorities. Currently, a substantial portion of operational expenses are, in fact, personal expenses paid via the business bank account. This does not reflect well on Karel as a business manager. From this initial assessment, Karel decides to prioritize the following. First, develop a management team consisting of the following: operational manager, sales manager, and financial manager. 2. Develop a sales team with explicit sales processes. 3. Further develop the technical skills of electricians and technicians. 4. Integrate procurement into the finance function of the business. 5. Find a way of developing a customer base. 6. Investigate the prospects of acquiring a computer-based integrated system for business processes. 7. Evaluate the business's current financial reporting to ensure that financiers and prospective investors obtain credible information. And 8. Remove all personal expenses from business accounts to ensure a clear distinction between personal and business finances. But before Karel can start to implement some of these changes, Karel must first craft a strategy to create a unique mix of value for customers, suppliers, and shareholders.